Good morning. It's Friday, April 28th. I am in Atlanta and again on YouTube. My apologies for yesterday's sound problems. Hopefully, it wasn't too bad for you, but it was something that was, I don't even know, but I have alerts now. So if anybody listening on YouTube hears it, they're going to alert me. Hopefully, I can edit it out, do good things together. First off, we're going to give a shout out to Brandon because and his name is Brittany Bitch, because he always used to come on under his wife or girlfriend's uh, YouTube name, and it was Brittany. And he said, "No, my name's Brandon, but it's Brittany Bitch. It will always be Brittany Bitch." TQQQ. He mentioned, I think it was Tuesday, around 24, 25, somewhere in that neighborhood. Hey, is it time to buy it? Well, today's the time to buy TQQQ 2771. I that's on the 4 hour. You're in this ascending block here. It started to cover this gap down here at about 25. I like to trade this on the 65-minute algorithm, and it did get you in earlier on the 25-minute on the 65-minute algorithm. It got you in down here. I think when Brandon was saying we should buy it at 25.93. It got you out with a loss, but I probably wouldn't have gotten out with the loss because it seemed like I was holding on to that 200-day. And then boom, it opened up big yesterday, continued up, another buy at 26.91. So if you got in at the 25, you're sitting at 27 right now. Hopefully you make that 10%. But kudos to Brandon on timing that one perfectly. It is gambling. Just be honest that there's luck involved in this investment, but that's the big one. Another big one, I'm going to move you over to Active Trader Pro to look at this one. TOP. If you guys didn't see this after hours yesterday, TOP, it is a Hong Kong brokerage, a Chinese Hong Kong brokerage. There is nothing in this stock. There is no news on this stock. It is 100% a short squeeze. And this is how a short squeeze works. Take a look at this. It opened yesterday at about $5 a share, somewhere in the neighborhood of $7. I think it got down to about $6.53 yesterday. It continued shorting up and squeezing. It closed at $20. Well, if you bought at $5 and you thought $20 was a great squeeze, um, you probably would have gotten out. And there were people all over FinTwit that were getting out and saying, "Oh my God, I just 4 times my money. I'm so happy." Well, then you started to see it go up here. I noticed it at about $40. And I said to a couple of friends, "Boy, should we get into this short squeeze? It doesn't have much of a float and it is going crazy. Typically on a 90-day, it's trading somewhere in the neighborhood of 650,000 and the volumes are just out of control. Could it continue?" And I decided, no, I'm going to go watch the Devils Rangers game. So it continued on 40, and I continued to make dinner. It got up near 80, and I said, "Oh, this is important. This is something." I think I posted in the private Facebook group about it, and then boom, it went up. This thing went to $270 yesterday. So if you had just bought on the open, I'm sorry, on the close, and bought at $20, you 10 times your money at least. And you knew it wasn't going to last. And overnight it came down. It opened up at about 4:30 this morning at about 160. So people started getting out and they started getting out and boom, boom, boom. Today, right now, you're at about $80. So even if that $20 closing price and you would have bought it, you still 4 times your money. It went crazy. This is a tip. This is not typical. This is what a short squeeze can do. If somebody was shorting this, if somebody had puts on this, there were two people that I saw on FinTwit who said they had shorted it because they didn't believe that it could continue to go up. So they wound up shorting the stock. They lost their shirts. Essentially, one guy who was up, I think 500% for the year on his entire account, he lost the entire 500% within 20 minutes. It is Crazy, crazy what this thing did. And it was all after hours, 100% after hours. And nobody addressed this. There's no news on this one. There's nothing. So, but that is an example of what can go nuts. It just went crazy. I saw TAOP uh, is something similar. And I won't lead you in here, but if you just go on Twitter and type in $ TOP, you'll see a bunch of people posting similar stuff and similar. But TAOP, they're saying is kind of similar. It is up 4%. This is a 66-cent stock. I would not buy it. I would not play this one. You can get really hurt and lose a lot of money in a very quick amount of time. And even filling orders on some of these penny stocks for most brokerages is tough. So be very, very careful about what you do. But I wanted to bring that one up. Amazon. Let's talk about a little bit more mainstream. Amazon released earnings. They were really good. Their earnings were really good. Even AWS was really good. The problem is when they started their phone call, they said, hey, we're seeing a weakening in AWS. And the weakening in AWS in April was masked by such a good May. And so essentially what Andy Jassy said, and this is the kind of summary of it, they are calling their customers and they're shoring their customers up. They're saying they're cutting customer prices to keep them locked in for a long amount of time so that they don't leave to go to Microsoft or Google. They said competition, but you know exactly where they're going, Microsoft and Google. Microsoft is doing something similar. They're basically tying people into their ecosystem. Essentially, that's what happened. Amazon was up. I mean, make no mistake about it. It was up 10% in post market after their earnings were released. It was a really good quarter. Look, 25 cents per share, 35 cents per share. Amazon doesn't have a demand problem. They have a cost problem. And as they continue to cut costs, you'll be fine in this stock. I have no doubt in my mind long term that you're going to be fine in this stock. Who doesn't, go out in your neighborhood, just walk around at 1 or 2 o'clock in the afternoon, you're going to see an Amazon van. I mean, there is not a demand problem. It is 100% a cost problem. And if you take a look at a weekly chart of this and we pull it back, you're trading around where you were right before COVID. It was $96. Do you think Amazon is less of a big business than it was before COVID? I mean, COVID, obviously, Amazon just benefited from COVID, but it's been beaten down. So long term, in my mind, I think you're fine. Um, there was one report that I read that Amazon, one of their big downfalls, they didn't hype up AI enough. If you use Alexa, if you use Google Home, if you use Siri, things of that sort, those things are all AI. Well, Amazon is right up there with AI. Alexa, in my mind, is probably number one. I think for home automation stuff is Google. I think number two is Amazon. I think number three is Apple. And I think Microsoft is probably going to get into some type of thing. I think Facebook runs a distant fourth, but what Facebook has that nobody else has is really the app usage that they can get that data from and probably customize it to your home, but they just haven't done a good job of integrating their stuff into hardware. And maybe Zuckerberg decides, we're going to partner up with Microsoft, and Facebook and Microsoft will become a huge business in the way of home automation, AI, and personal assistant type stuff. But again, Amazon, in my mind, I don't know that it deserves this $175 price target, because if we go over to FinViz, oh, come on, I mistyped stuff. And we look at Amazon, and you look at the PE, 43 forward PE. their income, they're losing about 272 million. I mean, again, it's an amazing company. The target price is 132. You're up 30% year to date. It's an expensive stock. Again, the target price is 132. You going back to 170? Probably not. UBS reiterated buy. They lowered their price target to 125. Moffett outperformed. They lowered their price target to 116. Deutsche Bank said buy. They lowered their price to 125. You're at 109. By the end of the year, if you're at 125, are you happy? Absolutely. I mean, it's not going to be a stock that's going to double year over year like it did. Earnings for some other social media platforms. Snap announced a lower usage. Their users were down. This one is down 17% in pre-market. It is trading at $8.63. Ironically, the candle yesterday, it got you in at $10.47. Wrong. Probably shouldn't be in that one. I do think that at $8, I think you're looking right here. I think Snap's going to get it right again. And I think you're going to look at a $10 stock. So I think Snap, once it settles out and you get confirmation, I think you can absolutely buy it. Another social media Pinterest. I need to do pins, Pins. Pinterest, they got it down. So they are down 10% in pre-market. This is down at 24. If you remember, the Elliott management took a position in this, and I think it was back here in October where it was trading at 21. It went all the way up to 25. So you did well. I do think that it's a 25, 26, maybe $27 stock, and you're at 24.33. Again, with their guidance down, maybe you're just not doing as well. You can see 29 cents a share. That was where the hope was, but it did pull back. But then 8 cents a share. And my guess is you pull back to the 200-day, which is probably about, it's going to open up lower than that. You might have some support here at about 24, but it's at 24.28 right now. You might have some support. If you use Pinterest, buy it. Again, they got it down, but I don't think it's the end. Tesla, I noticed that Tesla is under 160. It is 160.25. I mean, you're looking to cover this gap between 145 and 153. If you think that that's the case and it's going to cover that gap, hold out. If you want to say you're going to buy $1,000 worth of Tesla, and you want to buy it, I would probably buy $200 worth of Tesla at 159.99, just because you don't want to miss out. If for some reason something comes out, the Cybertruck is hyped up, all of a sudden he gets full self-driving correct, or they do some type of price increase on full self-driving. Again, that's the thing that you want to look at as a catalyst. Maybe they announce in China that they're going to do, an increased output or an increase in the April sales. Who knows? But if you don't want to miss out on Tesla, I'd say add in a little bit. Intel reported earnings. INTC is the symbol. This is a company that is just horrific. The CEO has a tremendous salary. But I don't think that he deserves it. I mean, this stock has just been floundering. When he took over, the stock was at 40. I think he made something like $150 million last year in salary. So, and the stock has gone in half. The swing on this is 30. Right now, it's trading up 5%, 31.62. I think under 30, you can buy this one. Over 30, you absolutely sell it and trade it. I just don't believe in this company. If you are poised to buy a computer, are you buying one because it has that Intel Inside sticker on it? I'm running for the hills. Remember, Apple decided not to include Intel at all. Gesslinger, I think the CEO said last night, or this was a report or something, that they want to make chips for others. So their way back into Apple computers is not to create Intel chips, but it's to actually just manufacture the chips for Apple. And maybe that works, maybe not. But That was one. I noticed that Snowflake was up yesterday, kind of came back down. You had this 148, you're trading at 144.85. I think it's a good, again, you've got this confluence of a descending wedge and an ascending wedge. So you just don't know where you're at. But I think 145 to 140 is probably a good price point to add it to get in. I'm going to add into mine personally. Datadog, I think it was up big yesterday. We had that buy signal at 71.16. You're back down at $70.20. I'm sorry, you're down 3% at 67.96. So it's just lost its way, and you can see that descending wedge. Again, this is probably a long-term buy. Their earnings are coming up May 3rd. So if you think that they're going to announce some bigger earnings, great. It was pointed out to me Cleveland Cliffs is down 0.33% at 15.12. I think 15 is your support level. I think it was Brandon. Somebody pointed out to me yesterday the CEO and the EVP, they bought at 1487 and 1496. It's not huge. The CEO bought $1.5 million worth. That's a pretty good. He bought 100,000 shares. Pretty good indication for me. This guy doesn't make a ton of money. So 1.5 million is probably a big amount of money for him. It's not, life-changing money. He's not, even if it goes to zero, is he gonna, be in the poorhouse? No, absolutely not. But to get a 1.5 million, I think you're putting in a pretty good bottom there at 15. I'll probably start adding to this one again once it has confirmation. Just be careful. It doesn't have confirmation. You're seeing that button hook, but it doesn't have confirmation. I was also looking over some of my favorite stocks yesterday, and I noticed Macy's, which I said under 20, is a great buy. Strong e-commerce platform. They are down at 1622. You do not have confirmation. I just noticed the slide in this one. The algorithm does not work on this, the 4-hour algorithm. It loses you 30% versus the asset, you only lose 3%. So this is kind of a broken stock. Again, the algorithm works on some stocks that aren't as volatile as this one. But this one over time, I think you can absolutely make some smart buys and cover gaps. Just look at this one. I mean, it's been on the slide, it came back, and then it's on a slide again. Visa has said the consumer is strong. A lot of these companies are saying that the consumer is strong. Well, if the consumer is strong, Macy's is a good one where people are buying, but maybe they're not buying a ton. Meta, the options market is indicating there were some huge buys for the $250 strike price for Meta ending next week. That could mean that this one in particular could be going for that gap. That's what I saw in the article that I read. I just remember this gap. And this gap goes up here to 325. It starts at about 244. This could mean the buy-in yesterday was at 240. I said buy it under 240. It's at 239 right now. If you go 239 to 250 in a week, it's probably not a bad bet. Again, are you upset that you bought this at 239 if it goes back down to 180? No, because you just add to it. This is a stock that you can continue to add for in the year of whatever Mark Zuckerberg called it, efficiency, year of efficiency. They're going to continue to cut costs. They're going to continue to roll out new products. They're going to continue to have that strong ad market. And if the consumer is strong, there's two places that advertisers will not cut. They will cut TV advertising. They will cut radio advertising. They will cut branding costs. They will not cut targeted advertising like Google and Facebook. They just won't. So I think you're fine there. And again, the options market is indicating next week to the ending of 250. It could mean that it's continuing to go. Sedge, this is a solar play. Solar has been hit hard. And you can see it. It's pulling back. There's a gap here between 253 and 263 that I started to get filled, isn't completely filled. You're trading at 289. For me, The median on this is 300. If I take a line at 300 and I just draw it, look at this support over the last year. That's huge. I mean, look at that. If you go under this, you buy it. If you go over it, you sell it. It's pretty clear to me that that's the line that you want to take on Sedge. So, Exxon earnings. This is one that your boy holds. Your boy holds a lot of it. And I will take you to a long-term chart. Their first quarter profit more than doubled from a year ago. $11.4 billion, the highest in 140-year history. That's huge. Right now, the buy-in is at 106. It's continuing. They're only up 0.36%. They made a ton of money. Their ex-dividend date is coming up on May 15th, and it's a decent dividend. It's not a crazy dividend. I think it's like 3-4%, 3.12. They're up 5%. An energy company that's up 5% year to date, great. PE is 8. Forward PE is 11. They have a market cap of 472 billion, and I think they said they're buying back 70 billion. Now, here's what I want to show you. If we go to a monthly on this one, I drew this channel right here. And I think this is the channel that you're looking at. This goes all the way back to 2002, where energy just wasn't doing a lot. It came back when we really started using a lot of energy. And then in December 2007, 2008, you saw the recession. If we go into a recession, this is what you're looking at. They are talking about, the CEO is talking about right now, you've got some supply demand where supply is outpacing the demand. But with China, with summer driving season coming up, they're expecting that demand will greatly increase, driving the price of oil up. If we go to the home right now of Finviz and we scroll down, crude oil is trading at 74.93. 74.93. They're talking about $85 to $100 price target for oil. If you get to the 120, like you did early last year, I think, you're going to see this as a $200 stock. They made that record profit with oil in the 70s. So imagine if you go up to 80 and stuff. Their costs don't go up, but their income does. So again, it's a supply demand issue. I'm holding on to it. My question with this long term, since we broke out of this top and you're at an all-time high, could we see a little pullback here towards the 100 mark? I don't know. I mean, look at that MACD, how high it is. Your RSI is at 69. For a long term, I'm holding on to it. I do think at 120, I'll probably start to trim and take some profits. My average buy-in price on this, I think it's like 38 or something. So it's a huge one. Chevron, same thing. They blew earnings away. Chevron isn't doing as well. It's down 1.5%. And if you look at Chevron here, the average price target is 191, and you're trading at 165. So I don't want to say that it's obviously a buy, but it's an energy company, and they're giving off 3.6%. This one's down 6% year to date. Remember, Exxon was up 5%. So this one might be beaten down, might have a chance to come back. Again, oil needs to continue to go up to justify these prices. The PE of 9 on an energy company is rather large, because if we go to Devon, which is another energy company, look, that PE is 5. Their dividend is 9.68. PXD, which is not really oil. It is oil and gas, but it's more gas than it is oil. 12.8%. Their PE is 6.86. So when you're looking at energy companies, take a look at those. Schwab. Schwab is still a good buy. I remember the CEO bought at about 60. You're trading at 51.02. Down 1.3%. I think $50 is your swing point on this. These are great. I mean, Schwab is a great company. Remember, the bank portion of Schwab is $2 billion. And if we bring up the market cap of Schwab is $91 billion. So it's less than 2% of well, just over 2% of the actual business. They have deposits, they have everything. They're perfectly fine. There is no problem with Schwab. So in my mind, you're buying under 50. Right now, it's at $51. I don't think you'd hurt yourself by buying at $51. FRC, on the other hand, FRC, you're probably gambling. May not be a horrible bet, but you're hoping that it lasts through the weekend. It's at $6.33. Remember, I was saying at 13 or 14, this was a good buy. The difference is management's a bunch of freaking morons. They think it's $100 stock, and they don't want to sell assets to do anything about it. So you've got a bunch of morons running this, and it could run it into the ground. The Fed doesn't want to step in. It's a little bit dangerous. Now, if you don't want to do anything on FRC, DPST might be, you kind of insulate yourself a little bit with DPST. It's not going to take it down to zero like FRC is. So DPST might be a good bet on this one. As we come out of this might be an $8-9 stock. Again, it's a triple levered ETF. I suggest you trade it. I would trade it on the 65-minute algorithm. So let's take a look at some stocks. I am going to put a list of stocks, the ARC holdings and my personal buy list, which are typically riskier stocks that had cross-ups, includes Starwood, includes Best Buy, it includes XPEP, the Trading Desk, Pinduoduo, Sandile, Tilray, MJ, which is a pot ETF. All of those are in my watch list. I am going to include that list down below with the cross-ups. I will not be going over those charts because it's just too many to go over. And if you're going to complain about that, buy TrendSpider. I'll give you access to everything. First cross-up, Google. Google 108.38. It's trading at 107. Again, I stick to my price target, anything under 100. But the danger that you have is that these guys could release some type of AI kind of hype press release, and then you miss out, and all of a sudden you're at 120. That's what you give up on Google. So when it's a buy, you probably should buy it. You're just getting out of a 12% gain. It's probably going into another leg up. I like it. Boeing, which is in our core portfolio as well. Boeing has a buy-in here at 206. I'd say wait till it gets under 200. It's at 204. Just wait till it gets under 200. There's no dividend in this one. It's it's based on press releases. Meta, we had another cross up on Meta. 206. I went over this earlier. I'm sorry, 240.36. This is one. Again, 250 is the strike price at the end of the week next week. 239, I think anything on 240, I think you're doing yourself well. Albemarle, which is a lithium company, this is one that is just, it got its confirmation. I don't know that I'd necessarily buy it. It's expensive. 186 is the price buy. I'd probably stay away from this one. But if you like lithium, it's a good company for you to buy. We went over tqqq has a 4-hour cross up. At 27.72, you're trading at 27.55. I would get out before the weekend. Just my take on it. You had a great day yesterday. I don't know if we're going to start giving it back today, but yeah, tqqq. XLC, the communication sector. This is one of the spider sectors. If you're into the communication sector, it had a cross up 59.38. Just look at the entries on that one. That's just one that if you like the communication sector, you can absolutely 100% get into it. I just don't look at, I have XLK and I think XLY, and XLV is one that I wanted to get into. GBTC had a cross up. And I do have to go over Mara. I'll go over Mara while we go over this. 1644 is the buy-in on GBTC. You have to trade this one. It's divergence between the actual price of Bitcoin and the actual cost of the Bitcoin trust. Their fees are just enormous. Trade it. You're just getting out of a 35% gain on this one. This is an amazing, amazing trading opportunity in a stock. It's got that MACD cross up. I think you're fine. If you think that Bitcoin's going to 35,000, get into GBTC on this one. I like it. If we look at the other one that I like in the crypto space, Mara, they had a cross up they haven't had a cross up. It's coming close to a cross up at $9.80 is where it's trading right now. I think this is a $12 stock in a good Bitcoin world, in a good cryptocurrency world. So I do think that you have an opportunity under $10 to buy this one. I've been pounding the table. I have not bought it. I am 53 years old. I am probably older than most of you. So my risk tolerance is a little bit less, but I do like this one in the crypto world. I just don't have a ton of exposure there. Verizon had a cross up. This is one that is iffy at best. 38.80 is the cross up. Now, the algorithm does outperform. Over a 2 years span, you lose 33% in Verizon. With the algorithm, you lose 16%. It has a tremendous dividend. They are building a good network. The dividend is 6.73%. The average price target is 44. They just had their earnings at $1.20. It's going up, but they're spending so much money. And so I do think if you get into this one, I think at 38, I think once it gets over 40, I think you sell it. But if you want to hold on to this one for the dividend, that dividend's really good. I'm just not sure it actually continues. At some point in time when they're spending that much money and they have that high of a yield, they're gonna pull it back. So IBM, 126.18 is the buy-in. It's trading right around that today. You've got this gap down here, which has been covered. You got this gap, which has been covered. The gap above at 138 hasn't been covered. Do I think it's going back there? I think it could. This is just, it's old tech that's trying to become new tech. Its PE is 61. The forward PE is 12. It's got a 5.2% dividend. Year to date, you're down 10%. I hate to steer you into old tech because I've always been a new tech guy. Google, Apple, Microsoft. I like it a lot better than IBM. But you can't argue that it's got a 5.2% dividend. They're trying to trap you into that thing, is in my mind, but it's solid. I don't think it's going to zero. I don't think you're going back down to 80. I think you'll continue in this range between 120 and 130. So if you want to hold off and get it lower at 120, I think you're fine. Rivian is a truck that I actually am super impressed with. What I'm not impressed with is the business that these guys have. They will continue on. This won't be zero. This is just expensive. They have to justify their expense because if you go over here and you type in, and we talked about Tesla at 160, they're not making money. They're losing $6 billion. They have a ton of money, though. I mean, they just have tons of money. They're not going to zero. They're down 31% year to date. It's just price to sales. They lose $7 every time they sell something. Um, so, the average target price is 25 and you're trading at 12. I just, again, downgrade. They brought their price targets down to 14 and 15. At $12, I still don't think it's low enough. If you look, they're selling at $20, but they're not selling a lot. Ford Motors sold all of their stuff at 26. Great trade by Ford. Great trade by Ford. Fantastic trade by Ford. But Rivian, $12. See, I'd rather see you get into Tesla. I think Tesla has a chance of going to 250 before this one has a chance of going back to 15. Just my mind, but the actual truck that Rivian has, really, really good. Their problem is more cost than it is anything else, and production. I mean, it's hard to make a car. T-Mobile had a cross up 150. You're trading at 144. This is just too expensive. For me, it's had its crazy, crazy run, and it's just too much. I don't have T-Mobile. I have Visible. If you're spending more than $30 per month, which T-Mobile is, go to Visible. It's Verizon's network. There's some discussion about, is T-Mobile a better network than Verizon? Personally, I think I work better on Verizon than T-Mobile, specifically out of cities. In cities, I think T-Mobile might be a little bit better, but outside of cities, Verizon just has the best coverage, overall nationwide coverage. And Visible for $25 a month. You use the link below and you'll get it $20 off. So it costs you $5 for the first month. If you have an eSIM, if you have an iPhone, you get eSIM. So just try it out. But T-Mobile did have a cross up. But it's just run too much. Look at that weekly chart. It's run too much. I wouldn't send you into that stock. Micron Technology. I think Micron Technology, I think under 60 is a good buy on Micron. You can see down here at the $50 mark, it was a great buy. You ran all the way up to 62. You came back to about 55. Right now it's 61.87. It's a little bit expensive. The RSI is at 58. I wouldn't send you into this one. They don't really have a catalyst coming up. I'd rather see you wait for it under 60. But 61.87 is where it crossed up. And then finally, the final one, LRCX, which is Lam Research. This one had a cross up. These guys are great. I mean, this is a great company. They had their earnings, $6.99 per share. That's down $518.77. It's expensive. Look back here in October. You were trading at 328. So you've had what, a 40% gain? LRCX, let's look, because it's got its PE of 14, so it's not crazy. Year to date, you're up 23%. For 6 months, you're up 36%. The target price is 525. You're trading at 5 to 18. So I don't know that I'd send you into that one. Great company, great PE. It's in the semiconductor space. In my mind, I think Qualcomm has a better chance of going to 150 than Lam Research has a chance of going to 700. So, again, Qualcomm PE of 10. It's a low PE. It's only up 3% year to date. Lam Research has just gone crazy. But there you have it. I will be going over on YouTube. I started 1 hour ago, so go to an hour on the live YouTube if you want to see a comparison of FedEx versus UPS. I'll be doing that. Maybe I'll clip it out and post it as a video on YouTube. But if you want on the live one, I'll be doing that in a little bit. So it won't be super in depth. It'll just be a nice little overview if you want to see how I do it. Sponsors, we talked about Visible. Also TrendSpider down below. If you like the charts that I have, if you like the algorithm, if you like my price points, if you like the entries and exits that you see on the charts, TrendSpider is the charting program that I use. You can use the code DSP25 for 25% off. I give you access to both my 4-hour and 65-minute algorithm. The 65-minute algorithm, that is David Yoakum's. It's not mine. You can see it on a public YouTube the chat between David and I. We outline how you set it up in TrendSpider, and it is an unbelievable daily. It is on a 65-minute candle, which gets you 7 exact candles during the day. So it is fantastic. I like it. The results have just been tremendous on some of these triple levered ETFs like tqqq and sqqq. If you have any questions, hit me up. The link tree is down below with all of the links. Okay, guys. Thanks. Have a good weekend. I don't know where I'll be on Monday. It will either be here in Atlanta or up in New Jersey. Thanks, you guys. Take care.